intro now.
My toupee is on, right?
Your toupee is centered and looks good. Sturdy, welcome back, man. Good to see you again.
Good to see you, Jimmy. Good to see you.
So this is we're going to talk about, you're going to do some lessons in this sort of ad hoc MBA for the healthcare provider, the physical therapist, the clinical owner. A bunch of these different things on the syllabus I think would fit your skill set. But what's the first lesson you want to teach? What's sort of the title of this thing?
Yeah, this is the financial and operations dashboards. So we're going to get into numbers dashboards, but really why they matter, and then what to do with them. Right. Because
I feel like you could have as many KPIs as you want, but the more KPIs you have, they become less K.
Totally. Yeah. They do. I got a bunch of stories for you, but one of them is this was and I don't even have this one kind of prep, but when you said that, yes, I had a guy with a $2.5 million business he was running with his brother that sent me a 47-page report when I asked for their KPIs.
Too many. How would you even go through that weekly, monthly, quarterly?
I wouldn't. That's exactly what we said. I asked him, like, what do you do with this? He's like, I don't know. Me either. It's too much, right? I mean, it's like, it reminds me of downtown San Francisco. They gave me a 76-page lease for a 1,200 square foot spot. And I'm like, no, it doesn't, I don't know how, I'm going to get, taken advantage of, but I'm going to be taken advantage of. And I'm not paying a lawyer to read 76 pages so we can come back with we don't like these 17 things or whatever. I'm like, no, right. We're done. There's information overwhelm, but isn't that indicative of our entire society right now?
Yeah. Everything's at our fingertips, so we keep everything.
Yeah. And we have a hard time sorting through. So I love what you just said, because we want to focus in on the key things, and then we want to interpret them. So another story real quick. This is why this is so important. I had a guy reach out to me. This was a $1.2 million business, about 4.5 FTE therapists, right? They spent $76,000 the previous year on marketing and advertising. And I, immediately said, well, why? And by the way, this is why benchmarks suck. Okay. He said, well, I'm supposed to spend 5 to 10% on marketing. And I said, who told you that? Well, the people selling marketing. Right. Of course. So
that part worked.
Right. Yeah. Like, well, time out. And said, look, what I want you to do is go back. And I asked him, do you know what a customer acquisition cost is? And he didn't know. I explained it to him. And for those listening, it is what it says, customer acquisition cost. It is how much does it cost you to acquire a customer? So, I gave him the formula, said, hey, you got $76,000. Need you to figure out how many people came through this channel. To his credit, they tracked a lot of data. So he had the data. So he could go figure it out. I got a text later that night around 6:30 or so. I was out at my kid's soccer practice. It was wintertime. It was dark. And I remember being there near the sidelines. I wasn't running the practice or anything. But I got a text and said, hey, my CAC, customer acquisition cost, is $787. Do you have time to talk? And he's the East Coast, right? So it was like 9:30 at night, his time. I know he was stressing out. And, I'm like, yeah, sure. I was talking to him from the field, and he had gone back and looked, and they had acquired 97 new patients over the past 12 months through this channel with $76,400 and something dollars, whatever it was. It ended up being $787 customer acquisition cost in a practice where they made about $1,200, $1,300 per case at around a 10-15% profit margin. So they were making $150 per new patient profit. He was literally, and again, this is the numbers, we're going to throw it all at you, but he was literally seeing 4 other patients that he was generating through his other marketing channels, primarily word of mouth, referrals, all that kind of stuff, in order to pay the marketing company for the one patient. So they were seeing 5 for every patient they saw through that channel for the $76,000. He had to see 4 more new patients to break even before he started to make a profit. And that's the thing with marketing. I had you know this, but I had a practice for over 20 years. And whenever marketing folks would approach, I would say, well, this is in our case, our customer acquisition cost target is $50. If you can do it for less than $50, I will pay you till the cows come home.
Right.
We will have a years long, decades long relationship. Nobody ever wanted to commit to it or do it. Very few even tried, because, and again, back to that benchmark thing, we're going to get into some numbers and show you the dashboard and all that stuff. But benchmarking against industry standard or other practices loses your context. And if you're in a practice that makes $500 profit per patient, or a practice that makes $100 profit per patient, your tolerance for what your customer acquisition costs for your marketing spend and all is different, right? If your margins are different, then what you can spend is different. Like for me, to acquire a coaching client, if I spent $787, I'd be happy because that relationship lasts for a long time. I'll pay it off in the first few months. It will then turn into a long-term relationship. I don't need that many new clients, right. All that kind of stuff. So it works. But for a PT practice, show me, I can name maybe 2 that make more than that profit off a full patient case. Maybe 2.
Right. All right. So when you're working with someone and you say, where's your dashboard? And either they show you and it's overwhelming or underwhelming, or they don't have one,
mm-hmm.
Where do you start? Where do you want to begin this lesson with KPIs?
Yeah. So this is one for everybody to write down. Is you need basically in a standard, we're going to go with a standard practice. Okay. So if you're in something a little different, if you're in Canada, if you don't build units, if you have speech therapists, there are going to be some things that don't apply depending upon, the specifics of your practice. And again, this is why we customize everything. But in general, there are seven, not 7, that's 5, 7, 7 if Chinese. So 7 metrics that are kind of the key from which you can figure out a lot of their stuff. Okay. And I'm saying they're key. I'm not saying they're comprehensive. Okay. But you don't need 47 pages either.
Right.
Right. So we're going to start with real simple: revenue and expenses. Okay. That's 2. You know what your gross revenue is. You know what your total expenses are. If you don't have a handle on those or aren't able to pull them out, and I've talked to plenty of practice owners who aren't, they stumble. We'll go back to that in a minute, but you need to be able to know what your monthly revenue is and have that written down somewhere. You need to know what your monthly expenses are. From that, we can figure out your profit and other things, right? We're going to use those numbers in other calculations. But revenue and expense, visits and new patients, okay, that's 4. Okay, leads, which almost nobody tracks.
Right.
Okay, but if you're spending money on marketing or effort, by the way, when I say money, I'm not just meaning money, time, energy, effort, all that goes into it. If you're spending any of your resources on it, you should be tracking it. Okay. But the leads, and then the other 2 are the units. So that may not apply to everybody, but the units billed for most. And then the FTEs. And by FTEs, I mean full-time equivalent clinical staff. All right. And people get really confused by this one too. We're probably not going to do a deep dive on what each number means, but an FTE is 40 hours of available clinical time. Okay. So if you have a manager that's got 32 hours of available time and they're managing 8 hours, that's 0.8, right? If you've got a part-time person that's 24 hours a week, that's 0.6. So you add those up though, because that's going to define what your capacity is. And then we use that in looking at your business design, because that's the other thing I've run into a number of times, Jimmy, is, people will think that they can grow out of their anemic cash flow in business, and that may or may not be true. And I've had others be like, well, I have to cancel these contracts because it's killing me. And it's not the contracts that are killing them. It's the but we need to look at the viability of the practices. I've looked at 2 within the last couple of months. They're in network. And of course, the big push is everybody needs to cancel all insurance and whatever. They're all evil. I don't think they're particularly great, but We're looking from a business case in your situation. And in both cases, if they were run well and efficiently, they would have like an 18 and a 22% profit margin respectively. So that's a viable PT business. You don't have to go cancel contracts. You got to fix other stuff, but that's exactly what some of the numbers and data tell us. Okay.
Do you want to bring this on the screen? Is this something people should be seeing now?
I have the 7. People can also go to my website, Sturdy Coaching, and look at Connect the Dots. I don't have those outlined here on this
Okay.
piece, though, Jimmy.
Okay.
The other thing I want to bring up, though, is when we look at these numbers, like what you just shown. So this is a summary. We'll go over this real quick. But this is a demo dashboard, and I can send the link to anybody. We'll put the link in the notes and give it to you, but they can look at it. And this is fully customizable, by the way. Right now, I'm working on another one that we're launching today for another client later this afternoon. And, this is kind of based on a true story. It's anonymized and a little bit tweaked, so it doesn't give away anybody. But these are essentially real insights. So what we've got is year to date through October, $2.2 million in gross charges, 196 in profit, 1.2 million in revenue. We use bank deposits here. We do reconcile posted, and down below, we looked at posted payments and then bank account to make sure that there's not a big discrepancy. That's the other thing numbers allow you to do, is kind of reconcile and make sure that you're, then what the billing company is posting and telling you is actually hitting your bank account and vice versa.
Right.
But yeah, we can look at things like this, like the visits and the new patients and the units give us these numbers. So this is a visit per case number. And as we go across here, you can see that their target is 13 visits a case. And that came out of an audit. So again, it wasn't benchmarked against industry standard or anything else. We went through and we looked at their patients, the PET's plans of care across the board, averaged out, figured out, over the course of 6 months worth of new patients, that 13 is right on the dot for as far as what they expect people to come in for. And then what we're trying to do and making sure of, and I don't have here's one thing we can do. Okay, I got to update that because it didn't. Let me cancel that and go back. How do I go back? Dashboard. Boom. So anyway, I don't have October's numbers on here, although they should be. But they came back up to about 13 in the real world. But what we're looking at is why. Why are we seeing a discrepancy between the target number that we know based on an audit they ought to be getting close to, and if there's a 3 visit a case difference or 2 visit a case difference, that's not only lost revenue, and this is one of my big things too. It's are we taking all those patients across the finish line? Are we achieving their goals? So a lot of what we're talking about here with all of this is connecting the dots. And when I say connect the dots, I don't even just mean the numbers. I mean connecting the dots between the people, the processes, and then the numbers. The numbers are a result, right? So this is really a lot of insight into how well, this is a feedback loop. How well are you managing? How well are you running your practice? How well are the players performing? Because if you've got good processes, good plays that get a particular result, then the players who are doing well ought to be achieving that. And that gives me another on this one. Another reason that you should be looking at this stuff. I had 17 PTs in our practice at one point. One of them was in the red, one was in the yellow, and 15 were in the green. The reason that's relevant is the one that was in the red. And by the way, we go deeper on this and then also track by therapists, like where do they fall? Because when you have this, you invariably have a few people above target, you have some near at target, and you have a few that are below most of the time. I had 15 people above the target. I had 2 people below, one by just a little bit. When I say red, he was more than 10% below. And when I sat down with him and talked about it, he told me that it was impossible. It was unachievable. So what I did was I pulled up the other 16, right? and everybody else in the practice across all the clinics was in the green, with the exception of one person who, by the way, had been gone on vacation for 5 weeks.
Wow.
So the year to date, she was actually still seeing more patients than he was, at like, 2/3 of the way through the year. And she had been gone for 5 weeks.
Wow.
So it wasn't impossible. We had, if 15 other people are doing it, if you have somebody like that, it's like, well, let's hook him up with somebody in the practice who can show him the ropes, right? Who can go through and, number one, verify that he's following the processes that you have laid out. And, number two, doing them successfully and comfortable with it. And then, if there are people choosing not to, because there was no other reason that he was below, then you start to make decisions like, where do you spend your time and effort? Do you coach somebody for how long? How long do you work with them? I want everybody to be successful. There are some people, and anybody who's listening to this who's employed people for any length of time knows there are some people who don't want to. And okay, but you can do that, but you just can't do that on my team. Right. So here's another where we're looking at the patient visits and then the leads and then patients per month, new patients. And this is where we get some of those others, but we can see over the course of the year what's happening there. And then that ties into our productivity. So per FTE, we normalize this. In this practice's case, their visit number is 216 a month. Okay. It doesn't matter if it's 170 or 216 or 230 or whatever yours is. We can look at that, but they're over productivity for 6 months out of the first 9 months of the year, right? So then we look at things like the conversion rate is a little lower, and I happen to know that the October goes even lower to 63%. Our target's 83, and we'll get to what that means in a second, but this is that lead number and the new patient number. But we look at, why is that? Is the front desk not doing their job? Are they not selling? Are they not getting people in? Are people flaking out or not showing up? Or are we over capacity so that there's no room on the schedule?
Good point.
Right? But that's exactly where we're talking about connecting the dots in two senses. One is interpreting the data, because I can go yell at my front desk or figure out or do remedial training or whatever because they're not converting. But what if there's no room on the schedule?
Right.
It ain't their fault. So I want to make sure, as far as like what I'm doing and running the business, that I look at the different aspects. And I tend to start with a process, like, is the process being followed? Right. And then a personnel, is this person or a couple of people not really doing it? And then we get into other things. But in essence, let's step back for a second. If you run your business like you see a patient, like you treat a patient, and you use the SOAP format, right? Most owners are basically stopping at the S, the subjective. They get the story, they hear the stuff from their team, they hear the anecdotal, whatever, and they jump to an assessment and they create a plan. And the problem is, if they don't cross-reference that with the objective, right? You don't just take a patient's word for it.
Sure.
You have a hypothesis in your head. You have a differential diagnosis after a patient comes in and tells you, and you've observed a couple things which are also objective, right? But you start adding in the objective pieces and you verify or refute your hypothesis. Then you come up with an assessment and a plan. And that's really what a lot of the numbers are. And what it can tell you is, if you have a dashboard, what we know where to look because it's not on target, but why? We need to figure out, we need to diagnose why. And if we have a capacity issue, that is going to impact our conversion rate. It's also going to impact our visits per case number. But if we don't diagnose it correctly,
right,
therapists need to see more patients. No, they don't. Right? Front desk needs to convert better. No, they're trying. Right? So it's not just the 47-page report or whatever. It's also this kind of integration and understanding and looking at all this stuff that allows you to, interpret and then take the right action at the right time.
What are you using technology-wise to track phone calls? Is there something that you're using, or is that just something that's calculated somewhere else?
It's a process thing. It depends. I mean, depends on what platform you're on. With some EMRs, you can create a case
Right.
with each phone call. So there are others. I have a client that they still insist on doing all the intakes on paper.
Right.
So it goes into the paper log, and at the end of the month, they count up the number of leads.
Right.
Because all we're looking at when we're saying leads, right? I'm not trying to overcomplicate this. Leads, I'm looking at inbound leads. Let me see if I've got it down here. When we look at the inbound leads, right, what we're looking at is fax referrals, email, online inquiries, phone calls, any and all of it, right? And then the other thing that this allows you to do, Jimmy, is you set a baseline. So like we just said, running your business like a SOAP note, gathering subjective information, objective, before you come up with an assessment, and then that before you come up with a plan, that will allow you to be more disciplined in your decision making. But there's also a baseline for test, intervene, retest, right? That was the only rule in my PT practice for 20 years, right? We had people very eclectically trained from different backgrounds and whatever, but the one rule we had consistently was test, intervene, retest. Whatever you're doing needs to get a result. And if it doesn't, then switch gears, ask for help, do something else, right? But we got to get results. So the same thing's true here. What if that guy, before he spent $76,000, and by the way, that was like the second or third year, right? So we're talking 200 grand plus.
Wow.
But what if in the first 3 months he was looking at the difference in his leads? I go and I hire a marketer, and I'm running at 115, 120, 130 leads, and then 137, 153, 152. I happen to know October is 156. Well, guess what? We started a new marketing effort. Well, the leads are up 30%, 30 per month. Okay. Is that worth it? Well, not if we don't have capacity. But if we have capacity and we're putting more new patients in, if we're converting 83% of 156 instead of 83% of 115, that's significant, right? So, there's a bunch of math kind of that, and that's in part to why people hire somebody like me, because after running a practice and being able to do this, I can look at this stuff and kind of go, yeah, this is what we might want to be focusing on. This is where it might be happening. Let's go through and test that idea. Make sure that that's actually the case. Because I'm not professing to have all the answers, but we can certainly get there a whole lot faster. And
this dashboard, is this something you built, and this is what people use when you work with them? Yeah. It looks like it's, pretty complete.
Yeah, we're going to be to this one, and this has been tweaked. This is I made a copy of this a month ago, so we've actually added a couple things to the real clients. But among them is that visits per case by therapist. We've added that data in and a tracking. I got a couple more things to kind of share on here, but that whole concept of connecting the dots. I was talking about this with Matt. Matt Fitzsimmons is my co-author on the books back here and stuff, and was my business coach back in 2011. And he's in New Zealand, right? And we were talking about bringing on, doing some kind of small group for smaller practices, and bringing in a bookkeeper or CPA, bookkeeper accountant type person, a marketing person, a compliance person, and kind of doing a group, right? And I realized that we were talking past each other on some of the bookkeeping stuff, accounting stuff. And I'm like, wait a minute, what do you mean? And his assumption, because in New Zealand they do this, and I've since talked to a couple of people in the UK, and they do this, the accountants and bookkeepers and all, they also look at the operational metrics. So if you're running a cafe, they'll look at the tables turned over, the ticket, the people per table, the ticket, average ticket price. They'll help you to see where your operations could potentially improve your finances. And ours don't, right? And I know that not just in my personal experience and people I've worked with, but once I learned this, I started going back to, hey, and I've interviewed over a dozen bookkeepers and accountants in the PT space, right, who work with therapists. like about this, about how, well, how many visits, and could you, do you ever look at that stuff and tie that back to their operations or their employees, to their expenses and what have you. And they just look at me like I'm speaking Greek, right? They're totally confused. And I'm sitting there going, well, but how, if you're only dealing with the money after it's happened, what kind of value can you really bring to me?
Right. All they're doing really is submitting a report and telling you what you owe.
Your accounting, right? But this was the disconnect, right? We started about the managerial accounting, which bigger companies like, work with a big corporation, they have managerial accountants, right? They hire people to do that. But in small business, at least here in the US and I believe in Canada, there isn't any, there's a big gap in the market. There's a big gap here that could help people connect the dots. Again, when we're looking at expenses, everybody wants to do GAAP, accounting and their tax and And it's like, it's simpler than that. For managerial decisions, we've got 3 buckets. We've got your profit, we've got your expenses, your personnel and your overhead. So this is total expenses. This is 2 of the buckets. Personnel expense in green and overhead in purple. And this is our total expense. And we put that up against the total revenue, and the difference between the expense and revenue is our profit. And there's your 3 buckets, right? But what we can do here is we can look at, well, why was my personnel expense higher in April? And once again, it doesn't necessarily tell us what's wrong, but it tells us where to look, right? And he happened to have, that was the magic paycheck month and some other stuff, right? But if I'm looking at my overhead, it should be relatively steady. And if you see like 25, 23, 21, 25, 20, that's what I want it to look like. I don't want my overhead bumping around, because that's the way I break these down is overhead is anything that won't change when you hire somebody or let somebody go.
So what should fit under overhead? Things like a lease,
anything that doesn't change.
HR. Okay.
Yep. If you got a contract with somebody, if your phones won't change, your other, now personnel bucket, people get a little bit more, it's a little more complicated because it's anything that will change. So if there's software licenses or a billing company, like percentage revenue of whatever, of collections, but you're increasing collections because you've added a person, then all that stuff goes into personnel into one bucket, because it's going to go up and down as you scale. But the overhead doesn't. So then our incremental gross profit is different. But like, Con Ed, professional dues, if you pay for those, work comp, insurance, disability insurance, taxes, all that stuff goes in the personnel bucket, because it's tied to people. And then for all of these, by the way, too, we set targets. And some of these I have the target outlined, like on this revenue. This has cost per visit. I have since updated for the clients. In this case, the revenue per visit target is 116, and the cost target, I think, is 98. And we put a straight line across at the 98 and the 116 so they can compare to the targets. And then if you're hitting target and everything's cool this month, great, enjoy it, because it won't last.
And if it's not, you at least know to start to look for something, a leak or something.
Yeah, and you feel more confident too as an owner, and I can attest to this personally, knowing that where I'm looking is going to have an impact on the business, right? Like, I can look at my age of accounts, and as long as I'm in, like 26 is a little high for them, they should be around 23, 22. But then you ask the question, okay, in February, 26, why? What happened? It's not huge, but it's like, it better not be higher than 26 in March, because now we're not collecting the money that we're billing out, right? So you can see trends, but if it's, bumping around in here, that's pretty cool. Yes, we talked about the bookkeeper. The test, intervene, retest is huge. The other one, and I know that Dave and I are going to do a thing on valuations, but when I've bought a couple of practices in the past, I sold my practice. I've certainly looked at a whole bunch of practices to buy and not just for me, but working with a couple of people to buy practices. And when we ask for the numbers, right, it turns into a fiasco. Because like you said, well, where do you get them? Well, some come from QuickBooks, some come from the EMR, some come from the bank account. Some you have to figure out with that's like your staffing or HR with your FTE number, all that stuff. But you bring them all together, and usually that ends up taking weeks, and especially if we want the last 3 years, it takes a long time, and we have to get them to give it to us in a format that I can then do stuff with and whatever. But what if you had all this and you had a summary? Like, here's your year-to-date summary. This is the first 3 quarters we can extrapolate out. But, we've charged 2.25 million. We've posted almost 1.2. Our bank deposits. Now, this is a little different because they do rent out a treatment room or a room to a massage therapist and some stuff. So those are a little bit different, but total expenses at $1 million.
So you should see posted and bank deposits. In theory, they should be the same thing if everything was running standard.
They should. Well,
so tell me. Talk.
Hang on. I will. That's a great question. Stick a pin in it for just a second.
Okay.
But in their case, they also have operating income. So that's like the rent that they collect versus the the PT operations. And then I have other clients that have this would be $30,000 from Pilates and $110 from PT or whatever, right? But then you got your total profit margin, and you can look at all this. Well, if you were looking to sell your practice and they said, well, can I have your numbers? You can export this into a PDF and send it to them. And if you did this for the last 3 years, how simple would that be? And we'll talk more evaluation, but what do you think that does to your evaluation?
Right. If someone can trust your numbers and can clearly go backwards, forwards, up and down with your numbers and see how you got them. Yeah, these numbers look great. How'd you get them? If you can't explain how you got them, I don't trust the number. Right.
Well, and if they're consistent across time, and if you're, and if you can, this is how we run things. This is why we have, the success we do, whatever. It's a piece of the puzzle, right? This isn't the end all be all. You can't solve all your problems through the numbers, because we've got to be able to translate these back into the language of the therapist. Again, like that visit per case number, I can't tell my therapist see more visits, right? It doesn't translate. What we have to do is go in and figure out, okay, so what is our process? Are they following it? Are they getting buy-in from the patients? Are they doing the blocking and tackling and following up with people who've fallen off the schedule? Are they, we have all that stuff in our standard operating procedures. Are they doing it? And what can we do to help them? And that's really my job as a manager or founder, is I need to support my players. I really take the coaching model seriously in that if I put people in the best position to succeed and I give them everything they need to succeed, they're more likely to succeed, right? The score will work out. But here, let's go back to your question about posted payments and bank deposits. This is a little broad right here, but generally what you're looking at, if we're looking at this, is this bottom line, there's actually 2 lines there of bank deposits and posted payments. And what we want is for that to be pretty close month to month to month. And if it goes bank deposits higher than payments by 2,000, then there we go, bank deposits by 2,000. What we want is that not to accumulate. So we're seeing, and that does kind of raise the question, if my bank deposits are always 1,000 or 2,000 more, why is that? Is stuff not getting posted? In this case, they're collecting a little over $1,000 a month in rent.
Got it.
1,500. So it's always, in their case specifically, it's going to be off by about $2,000. That's okay. But in general, yes, it's a check and balance, because if I'm depositing more than I'm posting, I'm probably sending out statements to patients for money they've already paid, which ain't going to make anybody happy, right? But if I'm posting a lot more than I'm depositing, where's that money going? Because if it's not going to my account, what's happening? And that's relevant, because I think I don't know if anybody's done PTs, but north of 30%, I think it's closer to 50 to 60% of physicians in private practice will be embezzled from in their career.
Wow.
It's crazy, but it's because they're not looking at it. It's that whole bank balance accounting. If I have enough money
Then we're
in
fine.
my bank account, then everything's cool, and they trust everybody because, once again, they're trustworthy. So why wouldn't everybody else be? And that's simply, not the way the world works. But so can I hit you with a couple other things?
Go for it.
So what we do with all this, and I'm going to kind of connect the dots back with you. So we have a summary, we go through, we talk about it, but really we're interpreting it. So if you understand your numbers and you can get your head around it and have it be, broken down piece by piece, bite by bite, so it's not overwhelming, because all of this stuff, by the way, comes from like a spreadsheet like this, right? And when you have the spreadsheet like this, I'm sure you know this, Jimmy, but there are two ways to scare away a therapist. Pull up a spreadsheet like that, right? Or talk about sales.
Mm-hmm. Bingo.
And either one of them, you'll hear the tires screeching and they're out of there real quick. But so what we're trying to do is make this digestible and focus on one piece at a time so that we can take action. If everything's cool, great, we leave it alone, move on to the next one. But you do that by setting targets and what's kind of acceptable. So we know that we've been below target here for a while. Why is that? Well, again, we're back to the productivity thing. So we look at these things from, multiple sides. It allows you to track your performance and look at what your potential is and see if you're actually achieving it. And then, excuse me, the ultimate goal, though, is to empower your people. Because if you're running it, if you're the founder, you're a manager of managers, or you're, teaching managers, or you're just managing a small team, the better you can support them through the processes and through the resources they need to succeed, the better your numbers are going to turn out.
So when you go with a coaching client, I'm guessing you walk through where all this information for each one of these KPIs comes from, like how a bill becomes a bill. Where do we get this number? How is it generated to make sure that information is coming in clean from where it starts?
Yeah, and they actually have a pretty simple, it's still a spreadsheet. We have to kind of get them over that part, but a simple spreadsheet where they fill in not just 7, but more like 12 numbers. And they plug those in each month. And we make a key, these 2 are from QuickBooks, or these 3 or whatever, 3 are from QuickBooks. And then this is from your bank, and this is from the EMR. And then, this is HR, or your staff, depending on how big you are. But yeah, it's not a lot of numbers, but what it allows us to do is then get into these ratios and calculations and targets and compare and see, are we cool? So I really do like the idea of the dashboard, because if you're driving your car, on a trip this weekend without a dashboard,
yeah.
What do you know what's going on, right? Am I following the speed limit? How much gas do I have left?
Right.
Is the engine light on? Am I overheating? There's all this stuff where, if things are cool and everything's kind of in zone, okay, that's cool. You're good. You're vibing, go. But if it's not, we need to know that before the car blows up, right? Before the engine blows up. And that's why I'm so passionate about this. When we first started doing this, let's go way back, right? 20 plus years ago, when I started the practice, got a partner, opened the first kind of joint location, hired the first person. It did not take very long at all. And I'm saying very long at all. It might've been hours, where I realized I didn't know what I was doing. Okay. Which was weird, because I had an inordinate amount of confidence, because I'd done every job in a PT company, except an assistant and except owner, right? So I'd been a PT, I'd been front desk, I'd done aid work, I'd done billing, I'd done back office, I'd done all this stuff. So I thought I had a better handle on it. Never managed people, though, right? And with the first hire, I think a lot of times we make assumptions, and not even the first hire, the fourth and fifth and sixth hire. We assume people are going to do what we do. Meanwhile, we don't have stuff written down. We haven't taught them very well. We think training means to shadow somebody for a few days and they'll pick it up, they'll figure it out. And that's just a terrible way of, it's not setting people up for success. So, I learned very quickly I didn't know what I was doing. So then we spent the next, decade plus figuring out what we were doing and learning and really intentionally using that business to learn about how to run a business, and through multiple things, some of it formal, hiring a coach and working with people, some like through organizations like EO, where learning was a big deal. And you could, network and learn both from your peers and also from experts that we brought in to speak and talk. And, there were other opportunities there, but really intentionally, deliberately learning parts and pieces all the way along the way and then putting those together. And, when we're looking at those numbers, we can blame the visits per case numbers off a little bit. We can blame it on capacity, but are we making our patients happy? Are all those patients getting everything they need? Or are we kind of rationing because we don't have the capacity?
Right.
And we should be hiring somebody. So, what this all is meant to lead back to is not to make things more corporate, not to make things colder and drier and whatever. It's really to connect the dots and make sure you have happy patients, because more of them achieving the goal and getting across the finish line, which, by the way, leads into happier staff, because why do they become PTs? Right. And there's all this burnout and all this whining and complaining and, lack of appreciation. Well, if all my patients are achieving their goals and they're telling me how great I am, what's my burnout level versus, people dropping out or people not being able to get in or that type of thing. Right. And then if I do that, if I have happier patients and happier staff, for some reason, I also get to make more money.
Mm-hmm. Biggest mistake with KPIs from someone who's beginning to work with you, what are they?
Oh, the most common is they don't track leads. So they're spending time, energy, effort on money, on marketing or some kind of effort, and they have no idea if it's working or not. They're measuring it by new patients. And there's a couple steps in between there that could be, like there's an intake process, there's a scheduling process, there's that stuff that could be breaking down. You could be generating more leads, you don't even know it. So I think that's the most commonplace. The other one is I don't see very many people looking at their visits per case number, and they're so like in the case of the practice we just kind of showed you, their schedules are busy, their therapists are productive. They wouldn't ever even notice that they might be undertreating the patients that they're taking care of. And, if again, you go back and you can verify and we can assess, but it makes us start looking at, well, are the patients achieving their goals? Are the patients happy? And you can add NPS into this and do some other stuff with it. But if the patients aren't getting across the finish line, then you will end up having gaps in your schedule eventually and have to be able to fill them with more new people because you lose the old ones. But yeah, I think it's a matter of interpretation and not really looking for help, because I guess this is one of my pet peeves too. It's like we go out and start a business and you're supposed to figure out management, right? You're supposed to figure out marketing. You're supposed to figure out how to, run and look at your numbers and stuff. And just because they're smart people doesn't mean you can, not even that you can, it doesn't mean that you should reinvent the wheel and figure it all out for yourself. There are lots of people who've done this stuff before who, the trick is finding a trustworthy, group or people or whatever that you can rely on to help you with that piece. And it should pay you dividends over and over and over again.
Right.
Right. I see you were asking about mistakes. There's a lot of them. Right. Another one is not wanting to spend a little bit of money to make a lot more money. Like very close to the chest, very like, well, I don't see the payoff. Well, here's the payoff. Right. I mean, if you could do this, we can calculate what the payoff is. Is it worth it? I mean, you should be getting an ROI. Everything you spend in your business should be returning something back to you, usually more than what you're spending, unless it's like insurance or compliance or something like that, where you have to spend it, right? But essentially, everything else ought to be getting you more money back in than what you're putting out. And if it isn't, you shouldn't keep doing it.
If someone has, they've left the shore, they're 3 years in, and they haven't been doing something like this, and now they might be. I mean, if I had a clinic and I'd been figuring it out for 3 to 5 years, I'd be super, I don't know, ashamed, or I'd be awkward or scared to sit down and bust open the books, almost scared of what I'd find under the hood. What do you say to those people where you're almost like, I don't even want to know about it. I'm just going to keep pressing forward. What I don't know can't hurt me. And we all know that's not right.
You have no idea how common that is, right? And not just 3 years in. I've gotten people 15 plus years in who, come hat in hand, tail between the legs, but they're coming. I know there are a lot more that don't, right, out of embarrassment. The first thing I say to all of them is, it's not your fault. You weren't taught any of this, right? And it was thrown at you, and like we just said, you're supposed to figure it out,
right?
Well, while you're treating, patients 8 hours a day and dealing with staff and the chaos that is Medicare and the insurances and all the rest of it, and the billing company and the EMR and the vendors and the supplies and the landlord there's too much stuff, right? So yeah, number one, don't be embarrassed. There's nothing at all to be embarrassed about, right? It's not your fault. You signed up for something, you did, whether you thought so or not. That's what I learned. When you start the business, you signed up to be the coach, you signed up to be the leader, you signed up to pay the bills, to do all this stuff. You just maybe, to learn marketing, to do whatever. But you take it one piece at a time. Don't get overwhelmed. Reach out, get some help from experts. And, there are people that are trying to do compliance all on their own. There are some great compliance people out there that can make it really, really simple and save you a lot of time and headache and the rest of it, right? Try to do your taxes on your own. There's CPAs and stuff that can do that. And again, make it simple and what have you, right? So use those experts. It's what they do. It's what they've done. It's what they're good at. Just find the good ones. That's all.
When I started my podcast 10 years ago, I would look at numbers daily, sometimes multiple times a day, to see what was going on. I now look at big picture numbers, like downloads. Sometimes I forget to look at it for a month, where I'm just like, I understand I'm doing the thing. And then I look up and say, how'd that go? Because if I keep looking at the numbers, I'm adjusting course way too much. It's called a course. It's long-term. So how often do you tell people to look at numbers? What's too much? What's not enough? Where's the sweet spot? Because I don't want them to, every day to be living in the numbers, I'm guessing.
No. You're exactly right. And we have an analogy. I don't know if you can see up on the wall there. That's Laguna Seca on the track. There's my first Porsche behind me. Sorry, I hit a button. I teach autocross, or taught autocross for a long time. And the first thing after showing them how to set up their seat and their seat belt and their hand position is to look up. Because when people are driving, they look at the corner, they look at the cone, and then they make it past that, they look up, and it's like, oh my God, it's a surprise. Well, you look farther ahead, right? The whole course slows down. They feel like they're going slower. They feel like it's smoother. Smooth is fast. Time starts dropping off, right? As soon as they can look out and anticipate. So yeah, it's exactly it. Don't stare at the cones. Don't obsess over the numbers. The right cadence, the right frequency depends. Okay. And some of it depends on how bad things can get. So it's not even the same frequency for the same number. It depends on the practice. So if I've got one practice I started working with was 52 therapists. Well, we want to look at some of those numbers weekly, because if something is off track, we need to know sooner rather than later.
Sure.
right? If I've got somebody with 3 therapists, we're working on more, monthly. Uh, there's kind of a tipping point when they get into 10, 20, PTs. I want to kind of update that monthly numbers report twice a month. I might want to look at my leads every week. I might want to look at things a little bit differently. And also depends on what I'm doing. So one of my quarterly initiatives is marketing effort and generate new leads. I'm going to want to look at those a little bit more frequently and start to make, quicker course corrections. If I just spend a bunch of money on an ad or something else and I don't see any return, right? So it really varies a bit, but in general, like this dashboard I showed you, we're doing it roughly once a month with just about everybody. Some of them we're doing an update in between and looking at run rate. So that's a whole nother. Run rate is basically your speed, like miles per hour. So if I have my first 5 days, I've got 500 visits in the first 5 days, and there are 21 days in the month, then I'm going to have 2,100 visits if I continue at this pace, right? So I can extrapolate out a little bit, and then I can monitor and see if my predictions are right or not. But it depends. And sorry, it's not a clearer answer than that, but
no, I think it's good. I'm curious about this since we're talking about KPIs. Is there one KPI that surprised you, either in how important it turned out to be or how unimportant? Like over the course of you doing this, was there anything you ever didn't look at and started to and realized it was really important, or used to pay attention to, and eventually you were like, this is not
totally
important?
Yeah, I got answers for both of those, and one of them's gonna shock everybody. Okay, the first one that I learned to appreciate, that I learned was really, really important, and not just because it told me how my marketing efforts were, but it was a leading indicator for how many new patients and how many visits I was likely to see next month, is the lead number. Because if I can predict, if I get 100 leads and my conversion rate's 83% on average, I'm gonna have 83 new patients. If I have 83 new patients at 13 visits a case, I'm gonna have whatever that is, 1,000 visits or 1,100 visits, right? In the next month. If I can do that and my AR is 28 days down the road, I'm going to get that much money 4 weeks later. So I can start being predictive earlier based on, the farther back I can go with my lead generation. I can then know roughly how many new patients I'm going to have, how many visits I'm going to have, what my cash flow is going to look like in 30 to 60 days. Okay, so yes, that's critically important, and very few people are looking at it or tracking it. It's not too hard to track. You just got to get your team on board with doing it, and that and to do that, again, that connecting the dots idea, you can't just tell them we have to collect leads now. They need to understand why it's important, because they don't understand how it contributes and how it makes your life easier, or lets you know whether to spend more money on marketing, or predicts, do we need to hire somebody else or whatever, right? Why are they going to do it? You got to paint the picture for them. The pictures in your head as the founder or as the person running it, those pictures are not anybody else's head. That's part of your job, is to get those pictures out of your head into their heads, right? So that's the one that I think is really important. I have it as one of my 7. I don't see very many people looking at it. I definitely don't see the marketers. They're telling you about awareness and clicks and what. Jimmy, if it ain't turning into paying customers, I don't care.
Right.
I don't care how many followers I have on Instagram if I don't have enough new patients or clients, right?
Correct.
So anyway, that's the one. The other one, this is the one that's going to piss people off. Cancels and no-shows. Because if my visits per case number is cool, and I don't have a bunch, of gaps in the schedule, because like a bunch of late cancels, no-shows, but like the cancellation rate, everybody's obsessed with that. But if I'm moving Thursday to Friday or Tuesday to Thursday, and I'm still getting that visit in, the patient's still getting what they need, and I don't care. And if I've got the demand and I manage my waitlist stuff, I can fill that Tuesday spot that they moved, as long as they, give me 24 hours or whatever more notice. And then now there are, I was working with a company that automated that waitlist thing. So if somebody canceled, it immediately went out, via text to a bunch of other people, anybody on the wait list, and they pick it up. I mean, cancellations, things like that get filled in 30 seconds. I mean, it's going to happen. I'm worried about how many of them are showing up, how many people are on, on the schedule, and are they finishing their plan of care? Because then if they achieve their goals, what are they going to say to other people about PT, right? How many people have you run into like, oh yeah, PT didn't work for me? If you drill down just a little bit, right? They didn't show up. They didn't come. They didn't understand why. There's all this stuff, but did they finish their plan of care and it didn't work? Not very many.
Right. So here's a question for you. This is more a management or a translation question. You discover there's a KPI that you're monitoring. A change needs to be made. How do you translate numbers into action for a team? They're not in a spreadsheet, right? And you don't want them in a spreadsheet. These are
no, you don't.
Or the front desk staff. Like, help me understand how you approach translating the thing that it's kind of like when you're in the movie The Matrix. You're looking at all the ones and zeros, scanning by. Okay, now you understand that you got to translate it to someone who isn't reading The Matrix.
Well, I mean, it's the same thing as like a little league coach realizing that little Jimmy's not hitting, right? His batting average is a 92, right? Well, you don't go and tell. So we all in some way, right? But you don't go to that kid, that player, and say, hey, I need you to be hitting 280. What does he do with that? So yeah, they don't know. But again, the beautiful thing about therapists, about PTs in particular, but this is true of OT, speech, you name it. When you're looking at a movement, right, or an ADL or whatever, you're breaking down the component parts and figuring out which one's not happening, and then you're focusing on that and fixing it, and you're coaching and you're repeating and you're practicing. You do the same thing with your staff. So if you don't have a process to do something, like buy into the plan of care, then how do you know if anybody's doing it, right? And if you're trusting everybody else to do what you do after 15 years of practice or whatever, you probably have learned a few things that the person who's 2 years out of school doesn't know. So write that stuff down, go over it, train it, practice it, have it be part of the onboarding induction process, go back and review it, repeat. But this is the other thing, like you said, translate to your staff. A lot of times you don't. Okay, and what I mean by that is you don't go into the staff meeting. I had a client doing this. I keep telling them all what to do, and they won't do it. I'm like, okay, how are you telling them? We'll go into a staff meeting with 45 people, right? And I tell them, dude, if I've got three, like what we did was we broke it down, we looked, and there were like 3 people that were below standard on their visits per case, right? There were, and of the 45 people, like almost 20 were therapists, right? But then there's like a group of 12 or so that are right in there, right in the zone. And there are a few that are over. Ironically, Jimmy, maybe it's not ironic. Maybe this will be self-evident to a lot of people. To me, it surprised me. Every time I see somebody seeing the more than the visits per case target, they're a veteran therapist who communicates well, who really works, and their patients achieve their goals. Their patients will bend over backwards for them because they do the same for their patients. And if I've got a target of 12 visits or 11 visits, in our practice, our target was 11 visits a case. My best therapists with the most experience were consistently seeing 13 to 14. And it wasn't because they were less efficient, right? It's because they were actually connecting with patients and helping them get fully across the finish line. And in that case, what's that person thinking if I'm bringing that up in staff meeting about, hey, we're not hitting our visits target, not hitting our visits number. Everybody needs to do better. And they're sitting there going, I'm killing it. Why are we spending time on this? So a lot of that goes into the one-on-one meetings, the coaching, the talking, the bringing it up, and then the blocking and tackling are, is there a process? Are you following the process? Let's go through, let's role play it. Let's see. Because again, that kid who's batting, I need you to go into the cages and work on your swing this week. Okay. Yeah, I'll do that. What happens when they come back, next practice? Hey, Jimmy, you been to the cages? Yeah, coach. Is that the end of the conversation?
Shouldn't be.
No. Get in there and let's take some hacks, right? I want to see it. So you show me. And by the way, people do this, we do this, therapists do this with their patients every day. You don't watch them do their home exercise programs. You don't need to sit there and monitor your people at the front desk or whatever, right? Or sit in on evals. Show me. You know within the first 5 to 10 seconds whether or not they're doing what they told you they're doing.
Sure.
It's literally that simple. Show me. Take me through that. Walk me through your process. Can you find the process? I don't know. It's in the playbook. That means they ain't looking at the process. Right? So, I mean, once again, this is, as a founder, what you signed up for, is being able to translate this stuff. Whether you can do it well or not is not relevant at the moment, but it is part of your job description, and that is one area where you will need to get good.
Parting shot for this. What I'll also do is I'll include a glossary, because I think what happens is people get lost in the jargon sometimes. So I'm going to include a glossary. I'll include that in the show notes as well. Just a lot of the terms that we either use today or other KPI terms. But what would your parting shot be for this KPI episode of the DPT MBA?
It's you gain additional insights, and you translate them into ways to inspire your staff. And then that leads to happier patients. So happier patients, happier staff, a healthier business. It really is about connecting the dots. I know we went into some depth on the numbers in the dashboard, but to your point, if we don't bring those back to what do we do with them? How do we make change from them? Then, I mean, you can look at numbers all day long. It doesn't matter.
We'll have more from you on this course as well, but if you want to get in touch, you can find him at sturdycoaching.com. Sturdy McKee, entrepreneur, business coach, and in charge of the 6-Hour CEO. Thanks for scratching the surface. Like, you're given the surface scratch. If you want to know more, you hire someone like Sturdy, and they walk you through these things, so you feel, I'm guessing, confident and competent.
Totally, yeah, and just more secure in your decisions that you're doing the right thing. And then when people see results, Jimmy, that's when it's like, oh, it's working. I mean, again, it's the same thing. It's just like what your patients say. Oh, those exercises you gave me, they really work. It's like, yes, if you do them, they do.
Who knew? We knew. That's why you came to us. Sturdy, appreciate you taking a shot at this KPIs for us.
All right, take it easy. Thanks, Jimmy. Thanks, everybody.